The S&P 500 and the Nasdaq end a 5-day winning streak as minutes for the Fed's October policy indicates a restrictive stance and no signal of rate cuts anytime soon. Chipmaker Nvidia's third-quarter revenue triples, but the stock remains muted as it guides for a negative impact from export restrictions to China and other markets. Stocks in the Asia-Pacific trade mixed on a weak handover from Wall Street. The GIFT Nifty is also implying a slightly lower start for the Indian markets. Brent crude trades flat around $82 a barrel as the market awaits cues from the OPEC meet on Sunday. Gold prices hit $2,000 an ounce as the US dollar weakens. The Tata Tech IPO, the first issue from the Tata Group in over 20 years, opens for subscription today. The issue is purely an offer for sale, with promoters looking to raise about 3,000 crore rupees from the issue. And aside of Tata Technologies, 3 other IPOs, Gandhar Oil Refineries, Fedfina and Flair Writing Industries also open for subscription today, taking the total to around 7,300 crore rupees for an IPO-heavy week on Dalal Street. It's the day of IPOs today, and we will bring you all of that in the next 30 minutes. Good morning to everyone. This is Power Breakfast in the Mumbai newsroom. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have opened, and it's a slightly muted start to the trading day considering the handover we had from Wall Street. As you can see, Hang Seng is completely flat. The Taiwan index is also down 0.5%. The Japanese indices opened with a slightly positive bias, but they also continue to remain around the flat line as well. Now, speaking of the US markets, the Wall Street ended Tuesday's trading session lower following the Fed minutes. The Dow fell over 60 points, while the S&P 500 also fell around 0.2%. The tech-heavy Nasdaq, though, shed around 80 points, and both the S&P 500 and the Nasdaq snapped a 5-day winning streak with yesterday's fall. Now, Nvidia shares also dropped over 1.5% in extended trading after the company reported its third-quarter numbers. While earnings and revenue beat estimates, the company has warned that export restrictions on China will weigh on its fourth-quarter results. Now, speaking of the Fed minutes, the Federal Reserve released those minutes last night, and they show that there is no indication of the Fed cutting interest rates anytime soon. CNBC's Steve Leisman has this report.
Minutes to the Federal Reserve's last meeting show that the committee believed that further tightening would be appropriate if progress towards inflation was insufficient. It's a bit of a more dovish take on the reasons why the Fed might hike again. All judged it critical for policy to be kept, quote, sufficiently restrictive and remain restrictive for some time. The committee was seen in a position to proceed carefully, so no big hurry on the part of the committee to do anything, because policy was seen as restrictive already and was seen putting downward pressure on the economy and downward pressure on inflation. Financial conditions, they said, had tightened significantly, and in the meeting, the officials debated the reasons for the rise in yields, the persistence of how long it would stick around, and the potential impact on monetary policy. You've heard that debate about higher yields doing the work for the Fed. This was part of the debate they had at the Federal Reserve meeting. Further evidence was required, however, that inflation was on a path to a 2% target, and there was only limited progress, they said, in bringing down core services inflation, though they thought they had seen much better inflation results in the goods sector. The risks to the outlook, they said, were more two-sided, including demand and supply remaining out of balance, persisting geopolitical risks, as well as oil markets being among the risks they discussed. Supply and demand, however, we're seeing coming into better balance. Inflation, they said, had moderated but remained unacceptably high, was the word they used. The labor market remained tight, but they saw wages moderating, and there was concern they remain too high at the moment for the Fed to be on target to its 2% target. Several said there was more upside to the consumer. Maybe they had more resources than originally thought. I'll leave it there, except for that one phrase at the beginning that I mentioned, further tightening would be appropriate if progress towards inflation is insufficient. Seems to put the onus on the need to hike again, needing more data to hike again, rather than the bias to hike again and being proved why they shouldn't do that.
No rate cuts anytime soon is what the Fed minutes are indicating. And let's also listen into some important reactions that are coming in on these Fed minutes.
The Fed was having this extensive discussion about tightening financial conditions, and now guess what? We're right back where we were before the September meeting. So tightening financial conditions is not really much of a consideration anymore. I think from the market's perspective, the market just wants to be done with the Fed hiking, and the Fed keeps saying, not so fast, we might go again. Problem for the Fed is they don't want the markets to conclude, as they have over the last few weeks, that they're definitely done, because you see what happens. The stock market goes wild and bond yields go down because everybody's then, the minute we stop talking about Fed hiking, markets want to go to the next thing.
Specific to the Fed, one thing we have to remember when looking at these particular Fed minutes is that was a discussion that happened before the fairly benign inflation report. I think since then, it very much cements the idea that the Fed is done in this cycle. I think what is still yet to be decided is whether the market's expectation of cuts starting as soon as May has validity. And if you extrapolate the current combination of circumstances, I'm not suggesting that's what's going to happen, but if you do, inflation not yet at the Fed's target, employment having had some cracks but still hanging in there, the economy doing okay, to me that doesn't justify rate cuts, even though if inflation continues to come down, it means real rates go up even without the Fed doing anything.
Some important reactions coming in there from the Fed minutes, but those were all the global cues. But how will all of this impact the Indian markets? We have our team of researchers joining in to take us through the trade setup and the F&O cues and the stocks that we need to watch out for in today's session. First up, we have Rima, who is joining in with all the market cues we need to watch out for this morning. Morning, Rima. 19,800 on the Nifty. Some strength yesterday, but the question is, will it sustain?
The trade has been very range for the last couple of days, and the range has only been getting narrower. And the GIFT Nifty is suggesting that the start is going to be on the quieter side, and maybe to start with, that range continues on the markets. You spoke about the U.S. markets, the Asian markets, and the handover that we got from Wall Street. But just to get back to that point about the narrow range on the Nifty, yesterday the Nifty moved in a very narrow range of about 75 points. The day prior, it was an 86-point range. And last week, we had the Nifty trade in a range of about 138 points on Friday and 245 points on Thursday. So as you can see, the range is getting compressed. Yesterday, the high on the Nifty was 19,825. We got there, but couldn't close above that level. We closed just shy of that level, and the low was about 19,750. So to begin with, these would be the markers to watch. But today, I think it's all going to be about the IPOs, and we're going to be talking a lot about them because there are 4 IPOs which open up for subscription. So there is Tata Tech, which will command most of the eyeballs, raising close to about 3,000 crore rupees. But you've got Fedfina, Flair Writing, and Gandhar Oil Refinery. So today there is going to be a lot of attention on the primary markets. Back to you.
And we will come back to you as well on Tata Tech. But thanks, Rima, for joining in. And now over to Abhishek, who would list out the stocks that we need to watch out for in today's trading session. Morning, Abhishek. Tell us more.
Morning, Homas. To begin with, Jio Financial has issued a clarification. This is with respect to the report that Jio Financial Services will have a bond issuance of 10,000 crore. So Jio Financial says that the company has no plans to raise money by way of bond issuance, or otherwise the news item is speculative in nature. TCS US Supreme Court has rejected the company's petition to file an appeal against a Court of Appeals for an order to pay damages award of 140 million that was passed by District Court of Wisconsin. So they will make balance provision of $125 million in their Q3 financial statements as an exceptional item. So RL plans to invest about 20,000 crore in West Bengal over the next 3 years. Reliance has already invested about close to 45,000 crore in West Bengal. The investment will be in digital, retail, bioenergy, and compressed biogas plant in West Bengal. Titan CCI has approved acquisition of additional 27.18% share capital of Caratlan by Titan. So Texmaco Rail has launched QIP, the QIP of about 750 crore, which includes a green shoe option of about 200 crore. Indicative price is at 129.1 share. There is a huge discount of about 13.4% to the CMP, that is yesterday's closing price. NHPC, the critical head race tunnel work at Tista V6 6 HE project Sikkim have been resumed. The project was being executed by Lanco Tista Hydropower Limited, WOS, a wholly owned subsidiary of NHPC, which was affected due to flash flood in Tista Basin. All Cargo Logistics Limited, the LCL volume for the month of October was down about 4% YOY and 3% month on month. Back to you.
Thanks for that, Abhishek. We'll keep an eye out on all of these stocks. And lastly, we have Manglam Malu joining in with the F&O Qs this morning. Manglam, good morning. 19,800 again. Will it or won't it?
Well, that's the question. Will it or won't it? One is betting their money on whether it moves around that range itself. Because yesterday as well wasn't a bad day, though we traded in a narrow band. If you just take a look at the way the Nifty and the Nifty Bank moved, it opened with a gap up. The gap up was sustained through the day. And somewhere around that 1 p.m. mark, there was a bit of a dip on both these indices. But that dip was quickly bought into. And we ended once again with a gain of almost 90 points on the Nifty, the narrow range notwithstanding. The only thing we have to watch out for whether mid-caps resume their uptrend. Yesterday, the mid-cap index hit a fresh record high. But immediately thereafter, we saw both the Nifty Next 50 and the Nifty Mid-Cap Index see a bit of profit taking, and both those indices ended at the low point of trade. The good part, however, was institutional flows were positive. After FIIs selling for the last few trading sessions, yesterday as well they sold, but they sold lesser, and the DIs bought a lot more, and as a result of which there was net inflow of almost 200 crores in the cash market. That's not all. The FIIs also bought close to around 700 crores in index futures, and in that they added long positions to the tune of 3,500 contracts and covered short positions to the tune of 2,500 contracts. As a result of which, a smidge higher in terms of FII's long exposure from 20% has moved to 21%. Important to watch out for what's taking place in the option space. Why? Because yesterday with the Nifty holding around that, just below that 19,800 mark, all those who had written the 19,700 call and the 19,750 call had to unwind their positions and cover their positions. So as you can see, some short covering in the 19,700 call and also the 19,750 call. Now the call writers are active at 19,900 and the put writers are active at 19,800. The premium on 19,900 call is close to 27 and the premium on 19,800 put is close to 60 rupees. What does this tell you? That the option writers have positioned themselves for congestion around 19,875 to 19,925 and strong support which has moved higher from 19,650 to close to 19,700 to 19,750. So those are the support ranges and the resistance zones as per the options action. Today is a Wednesday, which is a Nifty Bank weekly options expiry. Out there, 44,000 call and 47,300 puts are extremely active. So we are nearer to support than resistances on the Nifty Bank. Just watch out for a bunch of stocks. A lot of long positions added on Oberoi Realty, one of the big gainers in yesterday's trading session, and long unwinding seen after a big rally in names like Vodafone Idea as well as REC. So those are a bunch of stocks we'll watch out for.
We'll keep an eye out for all of that. Plenty of cues to watch out for. Thanks a lot, Manglam, for joining in. Time for a short break here on Power Breakfast. But up next, as we promised, IPO Corner, Tata Tech, the first Tata Group IPO in over 20 years, opens for subscription today. More on that on the other side. Stay tuned. Welcome back. You're watching Power Breakfast here on CNBC TV18 and on to the much talked about IPO, that is Tata Technologies. The first issue from the Tata Group in over 20 years opens for subscription today. Rima is here to tell us more about the issue. Rima.
There's so much excitement around this Tata Tech IPO, right? The first one since TCS in 2004. That in itself is enough to generate the hype and excitement that we're seeing. So first, let's get to the details. Issue opens today, closes on Friday. Price band 475 to 500 rupees. At this, the market capitalization will be just north of 20,000 crore rupees. This is a pure offer for sale. No money is going to be raised by the company, which goes into the company. The sellers are predominantly Tata Motors, which will be raising about 2,300 crore. You also have Alpha TC Holding and Tata Capital. Overall, the size is about 3,042 crore. You may ask that, oh, why is it just an offer for sale? Why not a fresh issue? Remember, Tata Tech is a cash-generating company. The cash on the books is more than $150 million as of last year. So that could explain why the company didn't need some money. Now, what does the company do? Well, it caters to the manufacturing verticals, predominantly automotive. Auto is, more than 50% of its revenues, but they also get revenues from aerospace and the heavy machine construction equipment kind of space. Now, to give you an example of the kind of work that they do, they're in the engineering and R&D space. So they help develop the entire, the supply chain, the systems, the processes. So for Tata Motors, it helped convert their existing ICE vehicles into electric vehicles. So this involved the design, the packaging, the integration of EV components like your battery, charging socket, and the other electronics that you need in an EV car, and they managed to retrofit it in the ICE vehicle. So that entire designing was done by Tata Tech. Now, about the financials, its revenues last year were more than 4,400 crore rupees. Growth rates have been steady. In the first half of this year, its revenue growth rate in constant currency term has been about 28.5%. Margins have been in a band of 18 to 19%. The only thing to note is the dependence on the anchor clients, Tata Motors and JLR, which together contribute close to about 40% of their overall revenues. Cash on the books is there, and the key comparable would be to KPIT Tech, but KPIT Tech's valuations are at a premium to Tata Tech. Back to you.
Plenty of excitement, as Reema said, and she highlighted a very interesting point as well, that the company does not need cash because it has $150 million on its books, and we'll keep an eye out on Tata Tech and the other 3 IPOs that are opening for subscription today as well. Time for a short break here on on Power Breakfast. Up next, we get you the cues from the commodity space. Stay tuned. Welcome back. You're watching Power Breakfast here on CNBC TV18, and on to some news from the startup tech space. Former Binance CEO and founder Changpeng Zhao has pleaded guilty to money laundering accusations. The crypto exchange has also agreed to pay a record fine of $4.3 billion to settle the charges. CNBC's Lin Lin has the latest.
The crux of what's happened, of course, is that this now ends this long-running investigation by multiple US agencies, except for the US SEC, into Binance, and they've reached basically a settlement that involves this payment by Binance of $4.3 billion. It also includes the appointment of an independent monitor to monitor its operations going forward. Now, its founder, Changpeng Zhao, he's agreed to step down as the CEO, and he's also pleaded guilty earlier today of breaking criminal anti-money laundering laws. He'll personally have to pay a $50 million fine as well. And on the website X, formerly known as Twitter, he said that this was the right thing to do. We know that the head of regional markets in Binance, Richard Tang, has been named as the new chief executive. A couple of hours ago, we heard from the heads of multiple US agencies, including the Treasury Secretary Janet Yellen. Now, we also heard more details about the allegations leveled against Binance, which includes failure to prevent and report suspicious activity and transactions related to US designated terrorist organizations such as groups affiliated with Hamas, Islamic Jihad, Al-Qaeda and IS, as well as supporting transactions in relation to child sexual abuse and illegal drugs. We also heard from Merrick Garland, who is the Attorney General. He had a pretty clear message, which is that you can use new technology to break the law. That doesn't make you a disruptor, it makes you a criminal. Let's take a listen.
In August 2017, Zhao founded Binance as a platform where users could trade in cryptocurrency. But from the very beginning, Zhao and other Binance executives engaged in a deliberate and calculated effort to profit from the US market without implementing the controls that are required by US law.
CNBC's Lin there on what is turning out to be a nightmarish week for the startup tech space, and we still have 2 more days to go. Now on to the conflict in West Asia. Sources tell NBC that the Israeli cabinet has approved a deal for the release of hostages from Gaza. The details of the deal have still not been made public, but the expectation is that Hamas will release some women and children held hostage in captive in Gaza. An official also told NBC News that would likely be a swap of 50 hostages held by Hamas for dozens of Israel's Palestinian prisoners, along with a 4-day ceasefire. And before we wind up the show, let's again take a look at how the Asian markets are faring. It still continues to remain subdued with a negative bias as well. The Hang Seng there still remains flat. The Taiwan index also down around 0.5%. The Japanese indices also continue to remain flat. Pull up the gift Nifty as well. It was pointing out to a subdued start for the trading day in India as well. There you can see an implied open of around 23 points higher. But with that, it's a wrap on this edition of Power Breakfast from myself and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.